clearly indicating that we will need a lot of technical help today. At the moment, holding up at a 1% gain. Well, with that, let's get back to results analysis. One of the stocks doing exceptionally well today is Havells. The stock is up 6.5%. Strong set of Q1 earnings coming in, and it actually came in above street estimates as well. It has clocked in growth across all segments. Margins have expanded by about 1 percentage point. Anil Rai Gupta, the Chairman and Managing Director, Havells India, joins us now. Mr. Gupta, good morning and thank you very much. A huge thumbs up for you from the markets, 6.5% higher on the stock. But, it's a little difficult to compare Q1 of FY22 with Q1 of FY21 and feel terribly elated about it because that was an unnatural quarter. So with your practiced eye, you tell us, how good was the quarter gone by and even the current quarter? Is this looking like much better than pre-COVID demand?
Well, I would say that you're absolutely right that it's not comparable. Last year was a complete lockdown during the month of April and May. This time, though the COVID wave was far more ferocious, but from a business point of view, there was continuity. And the factories were running. Some of the shops in certain markets were open. So it is not entirely comparable. However, I would also say that we did lose out on sales even in this quarter. So it's actually not really a normalized quarter. And I would say that given the circumstances, the performance or our expectations have been satisfying. And going forward, I think what we are seeing is that since the mid of June, things have started stabilizing. From the month of July, we are seeing growth. I would not say that much better growth because last year there was a pent-up demand, but we are definitely seeing growth over last year.
Okay, Mr. Gupta, good morning. I wanted to, scratch that point further. When you say growth, which are the segments where you're seeing a maximum recovery come through and where there is potential to perhaps grow in double digits as pent-up demand kicks in over the next couple of months?
Well, this year is a bit different than last year because last year, when the markets closed down, there was a sudden dip in demand for industrial switchgear products, professional lighting, underground cables, which is power cables. So the products which go into infrastructure or projects, those were not doing very well because the projects closed down and it took a long time for them to recover. On the other hand, the consumer actually came back with a big bang last year with the pent-up demand. It's actually the other way around this year because the projects didn't close down in the first quarter. That continuity remains and we are seeing good traction there. On the other hand, consumers' demand is lower. One, because it's not a pent-up demand. The other thing is that the consumers are wary of going into the markets and buying products right now. I believe going forward, when that starts stabilizing, hopefully, and touch wood, and there, I would say, which is almost 70% of our business, the consumer segment, that should start showing better growth in the coming time.
Actually, some of the economists were guessing that the kind of pent-up demand boost that we saw after the first surge and the first lockdown may not be repeated, because rural India was badly mauled this time. They were not that affected last time around. And also because you don't buy consumer durables that often. What's your sense? What are your retailers or stockists telling you?
No, absolutely right. I think there is no pent-up demand, but I would say that there is normalized demand which has come in. The retailers and the dealers are reporting, sales coming back to normal levels, though not at fully normalized levels at the pre-second wave levels, but they are coming back. As I said, more so in the industrial and switchgear segment, but going forward, I think they are expecting a better season or a better, I would say, festival season coming up. So people are actually now stocking up for the season coming in.
What about margins? Is this commodity nag killing margins or eating up margins, or do you think you're able to pass it on?
I think it has been a tough last 9 months wherein the commodity prices have gone up considerably, especially in the electrical segment because of copper, aluminum, steel, plus engineering plastics. So it has gone up, but some of them, there was actually because of the last year COVID wave, there was a lot of focus on cost and product cost as well. So there has been some cost rationalization. Some of the commodity cost upsurge has been passed on to the market. So I believe overall, in the next 1 or 2 quarters, we should see margins coming back to normalized levels.
Can you give us an update on the market share in the consumer durable segment as a whole, also in switchgears and lightings? What has the market share been? Has it moved up or down over the last many quarters?
I would say that post the first wave, we have seen market share gains in all the segments, whether it is consumer durables, switchgear, as well as the lighting segment. So we have seen market share gains. One, because post last year lockdown, there was disruption in supply chain for the unorganized sector, which I think we could gain. The second reason being that the consumers started giving more, getting more reliant on the branded and the trustworthy products, which they could believe in long term for quality. And third, I believe the overall I would say initiatives we took for channel expansion, as well as opening up new channels over the last 1 year. I think we've been able to gain market shares, not only in the last year, but in the first quarter as well.
Okay. Can you give us some color about the nature of the demand? As in, how has it been between rural versus urban, and rural in particular, tier 2, tier 3, tier 4 cities? Have you noticed any change? Also, is the consumer up trading or down trading? Are you finding more demand for more expensive products or less expensive ones?
I think the demand this year has been more secular as compared to last year. Last year, when markets opened up, for the metro markets, the A category markets took a long time to recover, and it was actually compensated by the small towns as well as the rural markets. This year it has been equalized all over, because as I said, the projects business is continuing to do well. So in the large cities, metro towns, the project segment is helping gain. So I would say that overall it has been more secular as compared to last year. And the consumer has actually not been down trading, which was the earlier expectation because of lower dollars in the pocket. I would say that the first COVID wave and now people are actually getting into more products which give them more features, products which they can rely on quality. So I don't see any down trading in the products, though the cost of the products have increased over the last 1 year.
No, on the contrary, sir, there were people who were explaining that the formal sector has not been hit. It has actually been rewarded. There is the wealth effect as well. For many of the formal sector, jobs have not been lost. It's the informal sector which got hit, and therefore mass products, other companies also complain, are seeing a little less demand. Anything on those lines?
I would say that Havells, being in the more mass premium segments, we are actually not seeing too much of a destruction in demand in the other segment also, which is the affordable housing. But that's very small base for us. We are now getting into products which are with the Rio brand in the affordable housing. So that's a small base for us where we're seeing good traction.
Yeah, very good to hear that. Thank you very much, Mr. Wright. It's always a pleasure speaking with you, and hope you have a very good FY22 as well. Okay.
Thank you.
We have overstayed on Bazaar. Thank you very much for watching from the entire Bazaar team. Chartbusters up next.